You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. This is training. This is something you will research and make sure that it fits you. So please take notes, write your questions down. Most of the speakers will take questions on the fly, but some do like you to hold until they're done with their presentation. So I want to introduce to you Jason Allen Jankowski of the Lion Online. See, the URL at the bottom is right. He's going to talk to us about the 5 factors to profitable trading. And just a little bit about him. I know he'll probably give you a little bit more, but he is a 35+ year veteran of leveraged transaction trading, trading extensively in futures, options, and Forex since '86. First, he was a customer, of course, and then he became a registered broker. He's self-taught and self-educated, which I think the School of Hard Knocks is probably the best place to get your education. He has focused on the psychology of trading as the key component to a successful trading methodology. I think we have a theme developing for this event. He has published 4 books on the issue of better trading and trades his own accounts every single day. He's a sailor, private pilot, and occasionally gets in the cockpit of a Formula Ford racing car. Wow. Well, that's super exciting. My mom got to do that one time, and she loved it. So, Jason, I am so happy that you're here. You're self-muted. I'm going to change you over to be the presenter so you can share your screen, and feel free to unmute your microphone to talk to us. And then would you care to tell us what was your worst trade and how did you figure it out and get out of it?
Are we live?
We are live, sir.
We are live. Okay, let me
turn up your microphone just a bit if you can.
Turn up my microphone. Hold on a second. This is the plus button. How's that sounding? Let me know if it sounds any better.
I think it's better. What do you people think? Who's in the room? Give us a yes. It's better.
I don't want to have my peas. I don't want to have my peas popping.
Well, you got to know that peas popping are the good thing on a webinar. Eric says it is better, so I think I should stop talking and let you take it away. But I was curious about what was your worst trade and how did you manage it?
Well, that's I don't know if I can even answer that. There's been so many of them. I will tell you that there was an experience I had that was cathartic. I mean, absolutely changed everything about me as a people who meet me today that didn't know the path I took through the markets. You know, people that knew me growing up or maybe from early business relationships when I was younger, that kind of thing. They meet me today. They think they don't believe it's the same guy. What happened to me radically altered my entire personhood, and that had to do with the crude oil market in during the first Persian Gulf War. And I talk about that in my book, The Art of the Trade, which is an autobiography of how I got to be a winning trader. And I can't really go into a huge amount of detail with that, otherwise we never get to my material today.
Okay.
But I will tell you this. I will tell you this. It changed everything.
Oh, good. Oh, look at Eric. You have a fan. You know what? Let me make you an organizer so you can see the questions box. It's going to knock your mic out for about 3 seconds. So count to 3.
All right.
All right. I think you're back.
Am I supposed to be able to see the chat window open now?
Well, it won't be the chat window on the right-hand side of your screen, which is where mine is. So it might be somewhere else for you, but it's on the right for me. You should have a more elaborate menu for GoToWebinar. Mm-hmm. And there'll be sharing, webcam, audio, dashboard, attendees, and questions. And you can pop out the questions. Questions is where everybody in the audience can speak to us, and chat is where we speak to the audience. And you can also reply in the questions box as well, going privately or sending it to all.
Okay, I see here a question. Oh, your book, Art of the Trade, is a classic, must read. Who
Isn't
said
that
that?
great?
That's really
Now,
nice. Who said that?
you see do you see the column that says received, REC''D? If you
Oh,
click
no.
that little arrow where it's pointing up, you'll be able to see the most recent entry at the top instead of having to scroll to the bottom.
Oh, I got to tell you, honestly, it's not working for me real well. I don't think I have a long enough screen here.
Okay. All right.
But
Well,
that's
it's
all
no
right. It
problem.
looks like someone named Eric, or I
Well,
can't tell.
if you wanna pop it out, there's a little,
Do a drag and drop?
no, there's a little box next to the X
Okay.
that you click that and it'll unlock it and put it out in the middle of your screen. And it won't share on your screen either.
All right, hold on a second. It's not working for me real well here.
John and Eric, John both said, I agree, it's a classic. And
Ah, there it
I'm
is.
pretty sure that I have a link that I can share when you're done that you decided everybody should have a copy of it, right?
Well, actually, yeah, if you can tell me where to paste it, I'll just go ahead and paste this link in for you right now.
All right. Well, then you just open the chat. Like there's a little arrow beside the
Okay.
chat. It's pointing to the right. You just click the down so it goes down, and you can choose all entire audience, and you can put the link right there, or I can even do it for you. There you
Okay.
go.
I think I got it. You got it?
All right. Well, you got it to organizers and panelists. I'm going to
Okay.
copy it,
Okay.
and
I'm gonna leave the questions up here a little bit just so I can make sure. Um,
right. I'm gonna also use the link that you sent me because I have a feeling that lets you know more about who's clicking and doing things with it. So there's 2 links in your chat box, folks, where you can get the book.
no, actually, that's a little bit. That's actually I'm ahead of
Oh,
the
it's
game here.
different.
It's a different
Oh,
book, but don't worry about
oh,
that.
okay. I'm sorry. I'm sorry.
Don't worry, it's okay. I'll fix it when we
Ignore
get to
it,
the.
y'all.
No, don't ignore it. Don't ignore it. It's a better book. But we'll talk about that.
Oh, you guys just got 2 books. Wow. Thank you, sir. See, now
Okay.
we were doing giveaways. Okay. But it's a very specific, like one person, 2 people, 3 people. Dale Elliott from Echo Traders has given out, I think now we've got 9 out there for they're doing things. But this is a little prize for everybody who's here. This is great. Thank you.
Well, it's got a sample to it. I'll show all that when we get to that point. But
Okay.
if people are interested in knowing more, all they have to do is get in touch with me, and I'll take care of that for you too. Don't worry.
And by the way, it's already 10 after, so please don't feel like you have to stop right at the top of the hour. If you go, 10 minutes over, it's okay, because I just ate up 10 minutes of your time.
Well, thank you. And with that in mind, I will try to be obligatory on time watching. I want to
All
make sure
right.
that we don't use up too much of the other guy's time too. But
Yeah,
if we're ready to go, I'm
we're
ready to
ready.
go. So are you ready? Are
All
we
right.
recording or are we all good?
We are ready. We're recording. We did our disclaimer at the beginning, and I will mute myself and you take it away.
Okay. Thanks, guys. Listen, first of all, I want to say thanks to Traders Exclusive for having me because if I remember correctly, this is the first time I've had a chance to do a broadcast with this group, and the material that I'm going to share with you is going to be considered outside the norm or outside of conventional wisdom. And I'm going to make a couple of bold statements, one of which is the material that I'm going to share with you has the potential to radically alter and change everything about your approach to the markets and your entire life. Now, that's a big statement, and it's very hard to communicate everything in a 1 hour period of time. So the floor is open for conversation or questions at the end of the broadcast. If we don't get a chance to cover everything to your liking, don't worry. I'm going to show you how to get a hold of me. I'm a real person. I'm here in Sarasota, Bradenton, Florida. And I spend my day every day trading the very same markets that you're trying to exploit. And what I'm going to share with you is something that doesn't get seen very often. And I hope that you like what you hear. I don't know if I'll ever get invited back to do a broadcast with Traders Exclusive, because a lot of the material that I'm going to share today might polarize some people. It's not my intention to do that. My intention is to provide the listener with some really valuable insights, and everything that I'm going to talk about today is heavily vetted. This comes from my life, from me living as a trader. This is an opinion. It's not something that I read in books. This is, you're looking at the inside of my life, and that is radically different than what most people present. So that being said, I want to get right to work, so let's do that. First of all, I don't know who's listening, so I always want to make sure that everybody knows that trading in off-exchange cash forex, which is something that most of you people I think are trading, right? Also futures and options. It's not suitable for everybody. You can lose money. People can and do lose money. You can lose some or maybe even all your investment. In rare cases, maybe more. So you want to carefully consider if trading is right for you in light of your financial resources, your knowledge, your circumstances, and your education, your tolerance for risk. Opinions, like what we're going to talk about in here today, subject to change at any time. So now that the regulators are happy, I'll let you guys relax and have your mind blown. So let's get to work. I want to tell you a little bit about me, because some people listening, I bet there's some people listening. If you want to go ahead and put a comment in here, please do. You know, I'm sure there's people listening that have never heard me speak before. So if that's the case, I want you to be fully committed to the process of understanding how I think. So you need to learn a little bit about me. So to talk a little bit about me, I promise I'll be brief. I was not always a net winning trader, as you could probably guess. I started in this business as a customer, and I did my very first trade in Chicago Board of Trade, big board corn, in 1986 as a customer, and proceeded to lose money. But I decided this is what I wanted to do, and I became a broker as a career choice in 1987. I no longer am a broker. I just work my own accounts and, of course, educate those people that are interested in my perspective. I endured a very painful process of daily work that almost killed me. I'll go into this in a little bit more when it's appropriate, but for right now, I just want to mention that all of the details are in very first chapter of my book, The Art of the Trade, if you want to get a copy or find it online. I had to discover something about the markets in order to win, and what I discovered was completely unexpected, not what I thought it would be, and it radically changed and altered my life. I had what some people call an epiphany type experience. What I learned was there is no secret. There's no secret. If you're one of the people that are looking to find a secret to this business, somebody who spends a huge amount of time doing trading analysis and education and reading and all the rest of that, none of that's really bad. It really isn't. I mean, it'll help you in some level, but it's not a requirement. It's not necessary. And there is no secret. And I'm going to tell you the secret in a minute. You've already heard it a million times. Now, how come your account's not growing? That's because there's a big, big difference between understanding and applying something and having head knowledge it or mental assent to agree with it. You can agree with something all you want until that change becomes resident in your behavior. You're never going to make another dime. It's just not going to happen. So what I want to do is encourage you to get over that step. There's no secret. You already know that. So what is it that we're really needing to do? I discovered, and I believe this, there's nothing very complicated to trading. I don't think it's a very difficult thing to do. I think we make it hard because of the stuff that's in our head, which I call cultural myth and self-sabotage. We don't know that there's a different way to think and that there's a better way to think and a better way to behave. Have you ever heard that expression? You really don't know what you don't know. You don't know what you don't know. Opening yourself up to that awareness is where you're going to make your biggest strides in becoming more successful at this. Right now, you have a huge amount of misconceptions that are creating your losses. Right now, I don't care who you are. If you're listening to me right now and you're losing money in the business, you know why that's happening? Because you have a head full of stuff that doesn't work and you don't even know that. Wouldn't you like to fix that? So I learned a few very powerful tools to create a winning environment. And I talk about these mostly in my books, and we don't have time to go through everything in this brief introduction to the process, but I'm going to give you a lot of it today to at least keep your interest up to a high point, because you're going to need to stay focused. Once you begin to apply these tools, your results will begin to improve significantly in a very short period of time. And I've got a lot of powerful tools I can give you, but I'm going to give you the highlights today because I want you to start with an open mind to making these changes today. I'm off the air here with you at noon. At 12:01, I'd like you to start making these changes, because here's what you're up against. And this isn't my opinion, people. The odds are against you. The odds are stacked against you, not the other guy listening. You. If you're not making money every day, day after day after day, week after week after week, you are going to lose. You're the loser. Over 85% of traders lose. That's not my opinion. These are the facts. If you look at any government mandated study of the markets, or if you are like me, can make a few phone calls and get information from people that ordinarily would never be in front of the public, which I'm going to show you some of that in a minute too. I can absolutely promise you that this number has never changed. Trading zero-sum transaction markets started in the 1850s. Chicago Board of Trade, actually, big start to this, futures. And that evolved into all these different kinds of products we can trade today. The bottom line is there's zero-sum transactions. That means you can't get into the market unless somebody lets you in, and you can't get out unless somebody lets you out. Thank God the markets are liquid enough that almost every bid and offer has a lot of business that's going to be done. But the bottom line is, if you buy the market, that means somebody sold it to you. So whatever happens next results in a profit to one of you, and that loss that the other one has, that money is deducted from your account and given to the winning trader. That's how this works. And I've been doing this business now for 35 years plus. I've talked with traders that have been trading everything and everything you can think of: futures, options, foreign exchange, trading for 10, 15, 20 years, and have never heard the term zero-sum transaction. A zero-sum transaction is what all these businesses operate in. And here's the bottom line. A zero-sum transaction means there's no money made or lost in the market. If an account posts a profit, that can only mean that that money was taken from another account trading the same market. So if you lose 500 bucks trading Forex today, that $500 you lost, that money was deducted from your account by the clearing firm, and it was deposited into an account from a guy who was long against you. So if you want to make money, how do you do that? You make money by finding out who the loser is and taking the other side of his trade. You don't make money by studying the markets. In fact, one of the key things I teach in my training is that winners study the losers, losers study the market. You want to lose? Keep doing what you're doing now. You want to win? Start figuring out how the loser gets positioned and take the other side of his trade. That's the bottom line. 85% of traders are going to lose in this business because they're approaching their actions from the wrong point of view. Now, here's the price I paid to learn that. Years of net losses. I mentioned before about my big catharsis experience, the trade that changed my life. Well, I bought crude oil in August when it was trading at $16.50 a barrel, and I was still long at $41 a barrel after the bombing took place on the 15th of January, 6 months later. I had hundreds of contracts on. I went shopping for Ferraris after New Year's Day because I knew I was going to make a fortune trading crude. And I had a fortune on it. And I thought, no big deal. No big deal. I'll just get out when the bombing starts because that's probably the end of it. You know, we're probably going to win. So I'll just get out when the bombing starts. Now, what I didn't know is that Chicago Merc and New York Mercantile Exchange and the Singapore Mercantile Exchange, they all have reciprocal arrangements. I didn't know that because I was working as a broker, and in the brokerage side of the business, which is now gone, uh, you had a better chance. You had a better chance walking on water than you did making a profit in a brokerage firm. The brokerage houses had no idea what they were doing. And I didn't know that because I really thought people could understand and make sense of this, and people who were owned businesses knew what they were doing, and they really didn't. And that big catharsis for me, well, once the bombing started, I was ready to get out when the NYMEX opened in the morning on the 16th. But between then and when the NYMEX opened, crude oil dropped dramatically, record low off the high prints in Tokyo, until when New York opened, it opened $15 a barrel lower. And guess who was long into that debit? I thought I was going to make millions. Instead, I lost hundreds of thousands of dollars. It couldn't have been worse, even if I was in Baghdad. It was horrible. Changed my life. But why? What happened? What I learned was what? The loser pays the winner. Every professional trader was flat going into the bombing. I didn't know that. Why is that? Because they knew it was over. They knew it was over, so they got out. I didn't know that. So I was the loser. All my money was just wait. I was eating. Eating. What else did I go through? Bankruptcy twice. Loss of credit. No bank accounts. There was a guy in Chicago, worked out of the Chicago Board of Trade. His name was Saul. And he would cash a check for anybody for a percent. Saul was my bank for almost 2 years because I didn't matter if I got paid. I couldn't go. No place I could go would let me. I couldn't get a bank account. How horrible is that? One step from homelessness. Years at a time, I went through that. I owed back taxes all the time. I never had a social life. I was not a bad looking guy when I was in my 20s and 30s, people. You know, couldn't get a date because I had no money. No vacations. I lived in disgusting. I lived in a place one time, it was called an SRO. They don't have them anymore in Chicago, but it's a single room occupancy hotel. They really did have hourly and daily rates. But I lived there because it was all I could afford. You know what I mean? It wasn't hell, but you could see it from there. It was terrible. One night, guy died in the lobby. Heroin addict, died in the lobby. What the hell? What am I doing? Right? The list is endless of what I went through to figure this out. Every dime I made, even when I had an income, went into learning more and more about the markets in this ridiculously futile attempt to try to figure out how to turn all this around, what the secret was to make money. There wasn't any. And one day I had this epiphany, this experience. Part of it came from my loss in crude oil. When I realized that the winners get paid their gains from the losers, I'm the loser. I'm the loser. What have I been doing? Why am I losing year after year after year after year? What is it that I'm doing? I'm the only guy doing it. I was completely amazed to find out that 80 to 85% of people who trade since 1850 in any market, doesn't matter what it is, futures, options, Forex, all of them, 80 to 85% of people who open an account do at least one trade and then close that account. Or trade for 50 years, close their account. Doesn't matter. 80 to 85% of those people all the time losing money. Where's all that money going? That was the epiphany. I discovered something about the markets that made all the pain and the suffering worth it, and that's it. That's what I learned. And I discovered what was required to become a net winning trader. And once that change was made permanent, I never looked back. Never looked back. I have losing days, of course, losing weeks, occasionally a losing month, once in a great while, a losing quarter, but I haven't had a losing year in 20 some years. I learned the essential difference between net winning traders and net losing traders. And I'm going to show you that difference today. Winning traders focus on different things than losing traders focus on. Write that down. Winning traders focus on different things than losing traders focus on. Once you understand that, I'm going to show you the skills that come out of that. So the next 5 things that we talk about are the skills that come out of that change in focus. So let's start with the first part. Everybody see this? Anybody recognize this? Can you guys tell me what this is? Anybody want to go ahead and get on the board there? Anyone? Nobody knows what this is? Most people don't. This is a painting from Osaka, Japan, and this shows the rice market around the time of our first trader we want to discuss. And let me just ask you this. Anybody know who this is? Anybody want to tell me who Monishi Homa is? And I want to just go ahead and preface this remark with this, is that what we're going to talk about isn't really new, okay? It's just forgotten. Most of what I'm going to share with you is just forgotten. Anybody know who this is? The Forbidden City? No, rice market in Osaka, Japan. Monishi Homa. Well, actually, you know what? I think what you'll see as we talk about this, most of what we're going to talk about, it's not really just forgotten. It's more like ignored by most traders. Homa was a rice trader in Osaka, and he traded in the mid 1700s. He amassed a fortune that today would be somewhere north of $10 billion. Single richest guy, period, ever lived in Japan. Took it all from losing traders. He did this without the benefit of computers, neural net software, artificial intelligence. He did it without live quotes. He did it without overbought, oversold indicators of any kind. How did he do that? Now, some people are going to say, well, I know who he is, right? No, we'll get to that. He wrote the first book on trading psychology. One of the very first books ever written in this field about how to make money trading was about trading psychology. How many books on trading psychology have you personally read? If you're like most people, none, because you're way off track in how the money's made. You don't understand the need for personal psychology. He's considered the inventor of Japanese candlestick charting, but that wasn't his intention. This is really important. Homa never intended to invent a charting method. Steve Neeson is dead wrong. Everything he's taught you is wrong. Has nothing to do with what Homa was trying to make as a factual representation. And you know, that's more common than you might know. Did you know Fibonacci? You guys probably use Fibonacci retracements. That's a big thing, right? Fibonacci was a 12th century Renaissance, pre-Renaissance, medieval really, mathematician who was all about the grand design and harmony of the universe. He's the person who came up with the golden ratio, right? He never intended any of that to be applied to the markets or trading. In fact, there were no markets and trading. Banking hadn't even happened yet. The whole big thing that the Medici family had in Italy, the start of the banking revolution, that hadn't happened yet. If you had bank, you know what that meant? You slept all night with one eye open in case somebody came into your hut and stole your bag of gold. That was it. That's how rich stayed rich. They could afford to pay people to kill people trying to come in the house and steal their stuff. There was no banks, no safe place to keep your wealth. Homa never intended you to make charts your focus. Here's what he said. Tell me if you've heard this before. You must be willing to go against the crowd. You must be willing to think differently. You must not listen to common knowledge or the crowd. And here's the best part. It is the thinking behind the tool, not the tool itself, that is the key to profit. Write that down. It is the thinking behind the tool, not the tool itself. I bet everybody in here could tell me what dark cloud cover means. Do you know what the psychology is behind that and why it works? Bet nobody here can answer that question, right? So what happened since the 1700s? What happened since this, when Monisha introduced the world to a method of making money? Well, major focus has become what? Technical analysis and math. Why? Because science is assumed to be the best choice for getting answers, right? Markets are traded prices. You can add and subtract and define prices, any way you want. That's mathematics. That's a proven method of getting to the truth. Because if I want to make a better quality brake pad, all I got to do is figure out how to dissipate heat at a predetermined amount and not burn up my brake pad. So what's the numbers behind all of that? Make a better quality mousetrap. How's that happen? Better math. In the markets, this is what you would call BS. Doesn't happen. What's happened since the 1700s? Creation of countless indicators, oscillators, prognosticators, artificial intelligence, machine learning, charting methods. I actually, when I went through this phase of lunacy called studying the markets, I probably spent somewhere, I quit counting at 60 grand. I probably spent over 100 grand on all this stuff. Weekend retreats, books, tapes, seminars, video lessons, one-on-one coaching. I did all of that. In fact, I went and found George Lane at the Board of Trade and banged on his office door and asked him if he would teach me about stochastics, because I wanted to learn how that worked. And he was very, very willing to do that for a fee. Of course he was. Now, why did I tell you that? Because all of this stuff right here, none of this has anything to do with how the money's made. But you don't know that. Well-meaning people, well-meaning marketers, they're selling what they believe will answer the question of where to buy or sell for a profit. They really do. Everybody that has something to offer you in the markets as an indicator or an oscillator or a method or something, they really believe that this is going to work and you're going to make money. And they might actually have customers that have done that. That's fine. But you know what? It's not the whole picture. See, if you've been through all of this, and maybe you're working with people now, that's fine. But if you're still struggling, trying everything, and it's just not working yet, it's not your fault. It's unfortunate that for the most part, the information that we've chosen to focus on is never going to help us. But we don't know that. And even well-meaning people aren't seeing the whole picture clearly. That doesn't make them bad people. It doesn't make their product horrible. It's not the whole picture. It's not the big picture. It's half the solution. Wouldn't you rather have the whole solution? You're just unaware of the other thing. So I want to talk to you, just introduce you to one other guy before we get started with the stuff I'm going to share with you, which is very simple. Jesse Livermore, greatest trader that ever lived. I'm sorry for those of you that don't know who he is. You need to just close out your browser right now, get online, get a copy of Reminiscences of a Stock Operator, and turn everything off. Read that book cover to cover, then decide whether or not you want to trade using the method you've been using. This guy has said it all. In fact, I use Reminiscences of a Stock Operator as a textbook in my coursework on the psychology of trading. And what's the big difference here? Listen to what Jesse had to say. There is no bull or bear side to the market. There isn't one. There's only the right side. Prices move along the line of least resistance. What does that mean? Livermore was also quoted as saying more than once that he considered chartists, people who do this, lines, dots, ratios on a piece of paper and project where the prices are going to go. He considered chartists as freaks or pet monkeys that were employed by brokerage houses to give them sort of like a complimentary tip. It's a tip making thing, right? Only because he never met anyone making money who used them. Jesse Livermore made $100 million in one day in the stock market back when $100 million was a lot of money. He owned people like Sam and Chase. The guy was an absolute perfect trader on every level. It was not uncommon for him to make 30, 40, 50 million dollars every year in and year out, without stock market crashes. He said, charting, why would you use charts? I've never known anybody that knows how to make money using that stuff. They're freaks. Why would he say that? Livermore, like Homa, understood that trading is about people, not patterns, prices, numbers, government releases, or anything else for that matter. It's about people. What will you do when you're pressed hard enough and losing? You'll panic. Well, if I know you're panicking, I know you're going to panic. I know what that looks like on a price chart. You know how a brain surgeon can look at 3 different brain scans? You and I can't tell the difference on any of them, but he can look at one and go, oh, that guy's a schizophrenic. The guy in the middle is suffering from Alzheimer's, and the guy in the end, he's normal. How does he do that? Because he knows what to look for. I can look at a price chart and tell you where the loser is in the price chart. I know where the loser is because I know what to look for. I think the trade, I buy there or sell there. Can I do it 100% of the time? Nope, not good enough to do that yet. But I do know guys that can. And they're not thinking the way you and I used to think. They're not. I want to talk about market mystification. This is the problem. The problem is people who educate traders today have completely lost sight of what professional winning traders know and what they do every day. They've made the market this mystery place. You know, I talk to people all the time. They say, oh man, I had a great year in stocks last year. My broker earned me 13%. I go, I wouldn't get out of bed for 13%. What? I mean, per month. I wouldn't get out of bed for 13% a month. Are you crazy? You're never going to get rich doing that. Well, how much can you make? I've had some pretty bad years where I've barely made 40 or 50% of my money. Those are bad years. How do you do that? Like some big mystery, right? See, people think that winning traders there's some mystification thing going on because they don't know how to do it and they desperately want to. But when a winning trader says there's no mystery to it, I can teach it in 10 minutes. The problem isn't about that. The problem is you got to do this every day the same way. You got to become disciplined at a level you probably have never, ever thought of. And most people won't do that. That's why most people are average, apathetic, and indifferent in everything. They're average, apathetic, indifferent, apathetic in their money, their relationships, what they do for a living. It's all one big gray area of blah. Because if they were to put themselves in a position to really excel, you got to put some level into commitment and discipline and getting bruised knees and skinned elbows. And you might have to walk away from a couple $100,000 because you blew it. I don't want to do that. Okay, well then be average. That's how it works. Market mystification, that's the problem. People who trade today have fallen into a complete misconception of how and what's required to win. Endless study, charting, analysis, calculations, projections. It's all based on some mathematical computation, right? Not a single winning trader puts their confidence in these methods. I'm not saying that they don't use charts. I'm not saying that they don't study the markets, but what they're studying and what they're looking for and what the chart is used for is not what you think it is. It's something else. Because of this mystification process, the typical trader has little to no potential to create a gain because he doesn't really know what the issue is he's trying to fix. You know what I'm saying? And that's why 80 to 85%, in some cases, depending on the market traded or more, traders will close their accounts at a loss. So how do we demystify this process, right? Before I actually experienced my epiphany of understanding, I had a potentially life-changing experience, but I didn't make the connection right at time, right? Took me a little bit. And I'm going to put you on the right track right now and write this down. This is it. I met a pit trader. This back when they had pit still. Followed this guy into his office because he was going to teach me something about the markets that I didn't know. Great. Here's the secret. You ready? When everyone is buying, look for a place to sell. When everyone is selling, look for a place to buy. Now, what does that mean? Does that mean you're bearish when everybody's bullish? No. It means if the market's rising in price, that's going to stop at some place, and it's going to stop because the market cannot physically process more buying orders. There aren't any left. If everybody's bullish and they've all entered an order on the buy side, who's left to put another buy order in? Nobody. So the market pulling back from that price level it's an absolute reality going to happen. You can't predict prices, but you can absolutely predict price action. What's the difference in your head? You see what I'm saying? That's the secret. That means when the market's in a steady climb, you're looking for, it's going to end at some point. What's the next reasonable place this will end at? That's where I'll sell it. Simple solution is right here. You got to find the market's weak spot and put your position on. Do you know how to find the weak spot? What do you have to look for? Now, if you know how to manage your trade, you can be profitable regularly. Now what I'm going to do is I'm going to show you the simple steps that we teach at netwinningtrader.com, which is the website that all of this data and documentation is on. It's not on liononline.com. It's on Net Winning Traders. That's why it's in the corner, and you guys are going to get an opportunity to see that. Remember, you have to think different and do different things if you want to have a different result. So I'm going to give you the foundation, show you what you need to know so you can create that process for yourself. Now, you're not going to probably be able to do it without help, but we're not at that point yet. All right, losses create pain. The typical average trader is losing. This is painful. To avoid pain, that becomes the goal of this trader. Therefore, this trader will use everything and anything he can possibly think of to lessen the pain he feels from losing. This is why he looks for confirmation. The first sign that you're on the losing side of this business is your need for confirmation. That's why, so I can reduce the pain of losing. The pain avoidance process is the same for every losing trader. Therefore, they're all going to do the same thing at about the same place at about the same time. That's a weak spot in the market. You know what that looks like. So by focusing on the weak spot, we create opportunity out of somebody else's losses, meaning their pain and desire to avoid pain is our pathway to our profit. So when the market is saying there's a lot of pain in here right now, it's time to get positioned. And this is the profit paradox. This is something really important. You've got to get this. Losing traders attempt to reduce their pain by increasing their number of winning trades. Their goal is to get 55, 60, 65% winning trades or more, and that's not likely under most conditions and most circumstances, and the probability of maintaining a high win percentage like that is statistically unlikely. I've been trading for 35 years, and I can get 52 to 55% regularly, maybe 63% for a period of time if I'm nailing it. You think a guy with 2 years experience doesn't even know what we're talking about yet, hasn't had a clue in his head how this works, is going to make 70% winners? Don't think so. This is important. William Eckhart is a turtle. He's one of the guys that was taught by one of the biggest traders in recent memories, Richard Dennis, created the turtle traders. The desire to maximize the number of winning trades or minimize the number of losing trades works against the trader. The success rate of trades is the least important performance statistic and may even be inversely related to performance. If you're focusing on trying to make more winning trades, you're focusing on the wrong thing. Let me show you something that will astound you. Now, remember I told you I got access to data that the public doesn't always have? This is a compilation of data from Forex.com. You guys know who Gain Capital is, right? This data represents a little more than 12 million trades done over a 1-year period of time, over 15 currency pairs, with the statistical average at the very end. The green bars are percentage of winning trades. The red bars are percentage of losing trades. So statistically, at Forex.com, over a 1-year period of time, 12 million plus trades, the average trader was making winning trades 61% of the time. Wow. But look at this. The average losing trade was twice that. You see what's happening here? They had 61% average winning trades, but the money made on the winning trade was too small to overcome the total losses from their 40% losing trades. And in most cases, the losing trades were twice the money on average that the winning trades put back into the account. So what's the first thing that this should teach you? Win-loss ratio. You don't need percentage of winning trades. You need win-loss ratio. You got to take a minimum of $2 out for every dollar you give back. It doesn't matter if you have 20% winning trades. If you take $4 out for every dollar you give back on your 80% losers, you're going to make money. In fact, statistically, and this is something you can look up called the probability of ruin matrix, you only need, are you ready for this? This is going to blow you away. You need 43% winning trades with a 2-to-1 win-loss ratio to make consistent money all the time. That's not my opinion. That's mathematical statistical fact. You've got to make more money on your winners than you give back on your losers, and you don't even have to have 50%. 50% winners is chance. I teach people to do this. You're going to laugh. You could flip a coin and make money in this business if you know how to hold a winner. That's one of the exercises we do at Net Winning Trader when we do one-on-one coaching, is we turn off everything that you use and you flip a coin every day at 9 o'clock in the morning. And if it's heads you buy, it's tails you sell. And by the end of 1 month, you should have a net gain. You think I'm kidding you? Try it sometime. Win-loss ratio. Again, William Eckhart. One common adage that is completely wrong-headed is this: you can't go broke taking profits. That's precisely how many traders do go broke. While amateurs go broke by taking large losses, professionals go broke by taking small profits. That is really important. Next, hold your winners. You need to have a method for this simple thing. Hold your winning trades. Otherwise, you can't pay for your losses. Look at what Livermore said. After making and losing millions of dollars, I want to tell you this. It never was my thinking that made the big money for me. It was my sitting tight. Got that? My sitting tight. Once he put a winning trade on, he turned the screen on. Well, he didn't even have a screen. Stop and think about this. Every major fortune ever made in the business was made before the invention. Livermore, before the invention of computers. Livermore didn't even own a telephone. He rode a horse to work. Horseback road down Broadway to get to work from Central Park. At Net Winning Trader, I teach methods for holding winners that are considered unconventional, such as turn the screen off, go for a walk. You got to maintain the skill. You can't beat your probabilities. Got to operate on a higher time frame. It takes a significant more amount of time for all the market participants to come to the conclusion they're going to lose. That's why the market goes off, goes south for a little bit, goes south for a week, and then week 2 or 3 starts to really go off, and then on one particular day, it goes whoosh right in the hole. You got to hold it for those 3-4 weeks to make the most money. Winning traders know they can't get paid unless the losing trader takes a loss. So it takes time for the loser to decide to take the loss. Most losing traders are operating on too small of a time frame. Most of them are operating on time frames of less than 30 minutes. So if you're the kind of trader that trades on a 1 minute, 2 minute, 3 minute, 5 minute, 7 minute chart, that's why you're losing. You're not trading the market, you're trading random noise. You're doing that because you're afraid of losing. And so you think being in and out is going to make all the difference, when in fact all you're doing is increasing the probability that you're going to be wrong consistently, because You got to be in and out. So you do a lot of trades, and half of them are losers, and you're not making more money on your winners than you are on your losers. You see what I'm saying? So you're repeating the same mistake everybody makes. Winning traders operate on 60-minute time frames or longer. They'll put a position on and not even look at it for 2 or 3 days, and then come back and take it off at 250 points profit. You got to add the winning trades. Nothing will help you reach top level performance for your account faster than a commitment to add to holding winning positions. And 100% of all net winning traders have a method where they add to the winning trades. Livermore. When I'm bearish and I sell a stock, each sale must be at a lower level than the previous sale. When I'm buying, the reverse is true. I must buy on a rising scale. I don't buy a long stock on a scale down. I buy on a scale up. You want to short the market? Each sale has to be lower than the previous one. Same is true for buying. Record keeping. Trading is a business, so treat it like a business. Keep good records of your participation. The problem is most traders are not keeping the sort of records that could be used to improve their results. They're keeping the records that makes them feel good, right? They like percent wins and largest gain and things like that. They're not keeping records of the really important things. You need the records that can help you improve 2 things. 1, holding your winners. 2, improving your win-loss ratio. So how do I get $3 out for every dollar I give back? How do I get $3.50 for every dollar I give back? I need more information about how I'm holding my winners. How do I hold more winners, right? So to summarize, so we still have a little bit of room for Q&A. Winning at trading is a really simple proposition. All you really need to do is follow in the footsteps of this, forgotten and ignored timeless wisdom. This is it. Focus on win-loss ratio. Every time I win, I take out 2, 2.5, 3, 3.5 times more money than I give back on my losers, right? Don't focus on your win percentage. Focus on the win-loss ratio. 2, hold your winners. If you're on a winning trade, turn the strain off. Operate on a higher time frame. Give yourself time for all those trades to play out. They're going to play out. Add to those winners. Maybe every Friday, if you're up, nicely, you can add to the position over the weekend. Properly document what you're doing. Know what you need to record so you can get help to enforce these winning process. Now, the program I offer at Net Winning Trader gives you all that stuff, but we're going to talk about something else today. Anyone for cake? This is the simplest I can make it, guys. My mother told me that if I could read, I could cook. And that's really true. There's really nothing to cooking. Read the recipe, do what the recipe said to do. Trading to win, it's like baking a cake. There's a recipe you have to follow. If you follow the recipe, you end up with a cake. You don't follow the recipe, you get something else. If you're not winning now all the time or consistently enough that you can take money out of your account regularly, like every couple of weeks or a month or 2 or whatnot, if you're not at that point yet, you just don't know what you need to do. You're not following the rules. Follow the rules, you'll be fine. There's all these different ways of holding a winner. Fine, find the one you like. There's all these different ways of calculating win-loss ratios. Great, find the one you like. All this stuff, but you gotta function within those rule sets. Otherwise, you're not gonna end up with a cake. To win a trading, follow the recipe all winning traders follow. That's it. There's no mystery to this. It's not hard. You can start tomorrow morning pulling money out of your market anytime you want. So, in conclusion, follow me on this. Floor is open for Q&A. Now you know what you need to do to win. Did you write it down? Here's my website. Welcome to have a look around. Discount code, write that down. And if you're skeptical, try this link. Now, what's on that link? Here's what's on that link. Psychology of Trading, how to create and maintain your winning edge. This is the best $10 you will ever spend on your education. Here's a free sample right here. Just read, just tell me if you think I'm resonating with you in the first couple of pages. It's the best money you'll ever spend. And if you still think you're ready to learn more, then I want you to consider me your friend in the business. I answer my own phone. I respond to my own email. Just go to netwinningtrader.com, fill out the form that says I want to know more, contact me. Go to my website, theliononline.com, which is referenced in the book, Psychology of Trading, because it's a companion website that has all kinds of written documentation and videos and stuff that you can use to help improve your rate of return learning. There's a contact form there. All you gotta do is say, hey, I want to know more. I'll take care of you. But I'm telling you right now, because I've said a lot of things that cause me not to get invited back, you may never get a second chance to talk to me. And that would really, really be sad. Because I'm telling you, what I have is heavily vetted. This comes from my own personal experience. I've made and lost millions of dollars doing this. I trade every day, my own accounts. Education and training is something I do because why? Because I like to feel good about helping other people. It's not about the money. And in fact, if you look at the money I ask you to pay, you're going to go, wow, that's awful cheap. So in between now and then, you can pick my brains all you want. And here I am. So let's take a minute if you like. Do we have any time or no?
Yes, we have time. Thank you.
Okay.
You know what? I have put the links. You guys need to go into the chat because I've put the links for both books. I've put the link for the netwinningtrader.com, and I've also put the coupon code in there as well. So if you need to copy paste things, if you'd rather not try to write it all down and take a chance of it coming out wrong, you need to get into that chat and grab it. Eric would like it. Let's see. Eric says, if you're looking for where the loser is getting out, does that mean you are looking for sentiment extremes, over optimism, over pessimism?
Okay. Can I kind of dissect that for a minute? Okay, because what he's talking about there is he has found some method or some way or some place that tries to quantify sentiment. You follow me? In other words, it's just another type of indicator that may or may not be accurate when it comes to what's happening in the market. So the first thing you have to do is ask yourself, do you want to trust something that's compiled by a third party? If the answer is I'm okay with that, it's accurate most of the time, then you might be able to use it as a tool to help you find where the loser is. I personally believe that bullish consensus is the most accurate form of that kind of data. So if you subscribe to bullish consensus, when it gets to the 80, 82, 83 percentile area, you're getting close to the turn. Once bullish consensus goes closer to 90 or above, you're looking at a consistent, strong top or bottom. That might be a 2 or 3 year high you can sell into, 2 or 3 year low you could buy. That's a big number. You know what I mean? But I would use bullish consensus. I wouldn't necessarily use bullish consensus is well established with that. It's looking for that information, but it's a really good way to get that information. It's like anything else. It's not 100% accurate. And you got to be careful if you're looking for a sense of certainty when you compile your data. You can't. You got to think in probabilities. You can't think in certainties. Certainties are part of the whole I need confirmation thinking, which is deadly to a trader. I can't take a risk unless I know what the market's going to do. Well, you shouldn't be trading if that's your thinking, because nobody knows. Jesus Christ doesn't know what the markets are going to do. You know, so how can you and I going to figure it out? The best we can do is take an educated guess. And yes, they are all educated guesses. You want the best educated guess, you got to find the best quality information that comes from inside the market. It doesn't come from crunching numbers, if that makes sense.
Right.
Okay.
So one other thing was, could you put up the 4 rules again? The F rules again.
The 4 F rules.
Well, it says put up the F rules.
Oh, okay. Let me do this. Let me go back a little bit and see if I think he is this what he wants?
Is that it in summary? The footsteps. So you can take a screenshot in your go to webinar. Right. At the top of the screen. Usually you can take a screenshot of that. Eric, is that what you're looking for? The F rules? Did you have any rules, a set of rules that started all with Fs?
I don't know. I don't know. I think maybe he fat fingered that because he wanted to make sure it got in there before we lost being on the air with him. You know. I don't know.
Possibly.
Yeah, but that's probably what he's referring to. If not, Eric, listen, all you got to do, take 5 minutes, look up my data on the web, send me an email, I'll take care of you.
Cool. Perfect.
I noticed that we don't have a lot of questions right now because I know people are kind of probably waiting for the next presenter. So I don't know if you want to give me another minute to just go ahead and offer an opportunity to answer some questions. It doesn't look like we have a lot of them, so
Yeah, and I asked everybody, you need to ask now or forever hold your peace, or you got to get in touch with Jason. Did I post your email and everything? You just go to the website and you can get right to him. You can book a time with him. Look at on Net Winning Trader at the very top. Buy the course, schedule a call. It's pretty cut and dried. So, and there's a ton of information there. And there's a contact us at the very top of the page. And I mean, it's just all laid out. So.
I was going to say, I don't think that I'll have a hard time following up with anybody, as long as they're willing to have if they're willing to follow up with me and spend a minute, I'll be more than happy to answer any questions. I'll make myself available for that. But I do want to, admonish everybody to remember, listen, what I said, I meant with every fiber of my being. If you're not making money the way you think you would like to, you can fix that. The problem is you don't know what you don't know, and you're focusing on things that may not really help you, and you don't know that. If you're willing to change that paradigm, you're willing to change that paradigm and step out into some new territory, then I've got material that can really help you, I believe.
Here's a question.
Yeah, go ahead.
Sorry, a question. I think it might be pretty deep, and he may need to get in touch with you, but it's what's the best way to tell / predict where the losing traders place their trades?
Well, okay. I can make a short answer to that, and I can make a long answer to that. So I'll give you the short answer so we don't, get too far into the next guy's time. All right.
Well, the next guy is having a little bit of trouble loading up right this second. So, and I also cheated you out of 12 minutes of your time. So we are fine.
We are fine. Okay. I'd like to make a little longer answer to that. Okay.
Yeah.
The question you're asking is this: how do I know when the loser is active? The loser is going to be in the market all the time. 80%, 85% of all the price action you see on the screen all day long, this is a losing trade to somebody. So they're there all the time. What you're looking for is a large enough group of losers that are participating for the same reasons on the wrong side. They don't know that, though. To quantify that information, you need a precipitating event. Okay, what's a precipitating event? Market reaches a new high or new low. That causes somebody to go, aha, I got to be in, or aha, I got to be out. Mm-hmm. It will cause a sense of action. I've got to take action, right?
Mm-hmm.
A precipitating event might be a piece of news. Piece of news is larger than expected or worse than expected. Oh my God, get me the hell out. Oh my God, get me the hell in. It causes people to want to take action. When a market is full of people taking action, it's going to be violent. It's going to move quickly. When nobody's playing or not interested in playing or don't care what's going on, it's going to move very slowly in a very small definable range. So if you're looking for a place where people are getting positioned, you're looking for spikes in price and a fallback right away. You're looking for the market looking like a honeybee's in there moving his wings. So back and forth, back and forth, back and forth, back and forth, whoa, 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 just going all the time. You know what I mean? That's what you're looking for. That means people are willing to play. They're willing to play now. They're willing to put their money at risk. A lot of them are willing to do that. A lot of price competition. That's the indication that the loser is getting positioned in a bigger way. Those are your best trades. Those happen on a 60, 120, 180-minute time frame charts more likely because they leave what's known as a wick on the candle. Some of you guys know what the wicks are. Some of you guys don't know what the wicks are. The bigger the wick, the more important that price area is to the market, and you won't see that price again easily. So when you see a big wick on a 1 hour or a 2 hour chart, that market ain't coming back to that price. So the next time it makes a move to there, tries to get in there, that's your opportunity. So you want to try to buy or sell in a test of the wick. If the wick happens and you're not positioned, don't sweat it. Wait for the retest, then get in. It's not hard to get a handle on it once you know what to look for, because when the wick shows up, it means that that price level was important to both sides of the market. The bear said, let's say it's a bid wick, right? It's on the bottom of the candle. It's a buy wick. The bear said, get me the hell out because I don't think there's any more opportunity. He entered a buy order to cover his short. The new fresh long also entered a buy order to get long because he said, oh my God, I can't believe that price. I'll never get that price again. Boom. So you got 3 times as many buy orders coming in. That means a lot of people either are covering their ass or they want to get in. So that wick represents a price point that's really important. You follow me?
Yep.
Okay, so that's where you can see where the losers are, because what's happening is the loser is selling into that wick because he thinks it's a breakout to the downside. Almost all the time, that wick penetrates into some trend line that's so important on a 10-minute chart. So he thinks it's a breakout. All it's done is give an opportunity, is look at the wrong time frame. So he sells it. His open sell order is your buy. So now he let you in. And because he's a day trader and he's going to be out anyway before the end of the day, he's short, he's going to enter a buy order to get out, to take his loss. So he's going to add to the pool of buyers. So when that wick shows on the buy side down there and the seller sold it into the hole, he's going to puke on that by the time it makes highs on the next bar. And he's lost his money and he's done, and you're long with a nice open trade gain and nothing to do but wait. See what I'm saying?
Yeah.
Yeah, it's not hard to do. It's hard to stay focused on without getting all that other stuff going on.
Well, I think it's hard to keep all the balls in play, like keeping everything in the air and never missing a thing, right?
Yeah.
Like
Oh, yeah.
it's so
That's you.
easy to focus on one thing.
Mhm.
So
People want to focus on one thing because that's what works in the real world. See, this is what I talk about in my coaching and in my books is that there's a real world paradigm that makes perfect sense and it works, and that's why we use it in the real world. But in the markets, that paradigm doesn't help you find where the turning points are because it's not designed to. The market operates under a different reality than the rest of the world does. And because of that, we have to have a paradigm when we trade that is a market-centric paradigm. And we can have both. We can develop a market-centric paradigm and a real-world paradigm. We just have to discipline ourselves so that we're trading according to the market paradigm and not the real-world paradigm when we trade. It's not something that's difficult to do. It requires work and requires commitment and requires discipline. It's like this. You know, some of you listeners might be fans of the Star Wars universe.
Mm-hmm.
Right? Probably know who the Mandalorian is. Very interesting show on a lot of levels. Okay, here's what was said by one of the people training the Mandalorian. Persistence without insight will lead to the same outcome. If you continually do the same thing, but you're not thinking, you're going to get the same results. So if you're not making money, it's not because you're stupid or you're unwilling to take a risk or any of those other things that are important. That's not it at all. It's that you think the way to make money is by doing what you're doing, and the results are telling you this isn't the insight you need. You're getting the same results. You're getting losses. It's time to say, at what point do you have to lose enough before you go, wait a minute, this isn't working?
Yeah.
Right. So that doesn't mean that what you're learning is bad or wrong. It just means it's not complete. At some point, you have to say, all right, I got to move on to what is.
Yeah. Awesome. Thank you for coming. And by the way, You have been
Yes,
with
Sherry.
us one time before.
Oh, really?
And
Good. I didn't
yeah,
think I was. Was it?
it was my inaugural year, 2020.
Really? Good news. How did I
And
miss Sherry? How did I miss that? Was it just one
I
time I
don't
was there?
know. I don't know. You must have been pretty busy the last 3 years with the vid and all.
Well, I've had all kinds of fun stuff I've been doing. I've been busy with other things.
I do have one person asking, do you trade every day or in the past? Do you ever day trade or in the past?
Well, what happens is this, is that if I think a trade's ready and I put it on, and the way I manage that trade, if I'm not correct, it gets taken out within the same day or two. So it ends up being a day trade, but it wasn't the intention. My intention is when I put a position on, my intention is to hold that forever. The net market will never get to that price again ever. But that's not realistic, and I'm not, 100% a winning trader either. So
Yeah.
I might put a position on. If it works perfectly, then I'm in it 3, 4, 5 months. If it doesn't work perfectly, I might be in and out in a day or two or a week.
All right.
So
Well, there you go, John.
my
Get
intention is
in
the longer
touch.
time frame.
Yeah, there you go. John, get in touch with Jason. You guys have a ton of resources here, books. I mean, wow. Thank you so much. That was a ton of value. And you absolutely will be invited back. I really appreciate your time.
Oh, my pleasure. Listen, thanks, Sherry. And for everyone listening, thanks for the extra time. We'll let you get back to work. Have a wonderful day.
You too. Bye-bye now.
See ya.
That was Jason Allen Jankowski of the Lion Online, and most notably the netwinningtrader.com, which I changed his URL at the bottom of his slide because that's where you're going to find his offer. And I want you to know that his coupon code is in the chat. So if you don't know how to find it in the chat, let me know and I will get it together for you. All right, next up, we have a lady. Oh, I need to do some housekeeping real quick. Tradersexclusive.com is where you're going to find all the replays for all of these sessions. And I've got them set up so that you'll get each speaker. You'll just have to scroll down the page to find the speaker you want till I get really good at setting up URLs and anchors and stuff on the page. But it's tradersexclusive.com. You go here to this, if you're on the home page, this is the actual link, /educational_webinars_for_traders. So, I mean, easiest thing to do is to come to the page, click on Trading Education Webinars, and you'll see it from there. Next.